Okay, welcome back everybody to the Today's Market Explain, a 4-star podcast. We're getting ready for the Christian holidays here coming up over the weekend. There's been other holidays all throughout the month, and we're ready to kind of give a wrap up of the month of December, or at least as far as we are now. We still have 10 days left. But anyway, I'm pleased to have back with us our co-host, Mr. Christopher Reardon. Chris Reardon is our 4-star director of development, master of all things portfolio, and he still loves his Cleveland Indians. Chris, welcome to the podcast.
Thanks, Brian. Glad to be here. Glad to talk a little bit about the markets before the holidays.
Excellent. Thanks. And I'm Brian Kasal, founder and CEO of 4-Star Wealth, Eagle Scout, National Boy Scout Foundation trustee, advisor to insiders and CEOs, chief dad to Quinn and Evan, and husband to the amazing Tripty. And before we get started today, I just want to remind everybody, if you really like what we're doing, please tell your friends and forward this podcast. And also give us a 5 out of 5 ranking. That helps our rankings and gets us more exposure. So we appreciate that. So today we're going to do our standard review on markets and the economy and what we see out there. And we have a guest who's going to come on to talk to us about interest rates and inflation, because there's a lot of weird things we're seeing out there. And then also let me make a commercial. We talked about Antarctica a number of times in the past. And the reason we talk about that is that's the only continent that this podcast has not been heard on. So we've been heard on every other continent in the world. So the open thought out there is, if anybody wants to go to Antarctica, and we're planning on going there later this year, then we'll be able to listen to the podcast from Antarctica, and then someone will have heard it from Antarctica. But nonetheless, we'll put that out there again. Chris, let's talk a little bit about our positioning and what the markets are doing. It's been really a strange time. Cash came into number one position. Commodities were high and they've way pulled back. Let's go through the tally score, Chris.
Yep. Yeah, it's been a bit of a shakeup since the last podcast. So cash is still the number one position, but we are seeing it weaken slightly. It lost 7 points, but it's at 235 points now. Kind of by far the number one leader there. International equities is in the number 2 position. So that's a big move. It jumped from the 4th position to the number 2 positioning there. And so it's gained 25 points since the last podcast. And it comes at 202 tally points.
Okay.
Domestic equities is holding in that 3rd position. It's at 185, and it's lost 5 points from the last podcast. So kind of cash and domestic equities have held relatively stable. International, huge move forward. Commodities, which is now in our 4th position, that pulled backwards that you mentioned, Brian. So it lost 37 points from the last podcast and moved from the number 2 position to the 4th position. And it's at 181 tally points now. And then the bottom 2, no change here. Fixed income is still in 5th. It's gained 16 points, so it has actually moved up a little bit there. But it's at 160 tally points, and currencies is still in last, bringing up the rear at 128 tally points, plus 9 from the last podcast. So bit of a shakeup, though. I mean, top 4 really. There's a lot of kind of movement going on there in the last month or so.
Well, now commodities went down to 4, but they're right on the edge of 3. So they could easily jump. And we're starting to see a little bit of a jump in the last couple of days in the commodity markets. And we've re-engaged in a couple of positions there. But it does seem like things are constantly swirling around. And that's kind of a sign of a bear market, right? So cash is in there. Now international comes up because of currencies and other things. U.S. stocks have gone down, then they're stabilizing, so it's a really not a normal environment. Normal meaning 85% of the time the markets are going up. U.S. stocks are usually number 1 or number 2. Maybe international is up there, maybe commodities is up there, and everything else is down lower. So U.S. stocks are down now, cash is up. International was down, now it's up, so we're swirling around. That's a sign of a bear market.
Yeah, we've seen, especially in commodities. I mean, you think commodity is such a broad sector, but really what drove that downwards was kind of a pullback or more of a renormalization off of highs of oil. And then what we're seeing, it kind of what you mentioned, Brian, move up slightly in the very short term is precious metals, because we've seen some currency changes, things like that. So a lot of different things that play in the market right now, and like I get great analogy. There's a lot of swirling. There's a lot of stuff going on. Different asset classes within there fading, and other ones coming up now.
A lack of direction for sure. And
Yep.
we saw, earlier in the year, because of a strange anomaly in the nickel market, we saw that explode and double to like 2 days in a row, and then it faded out. It's starting to run again. So nickel's moving. It's up 6% today. So there's some really interesting things going on in commodities, even though the overall group has gone down. Looks like they may turn around a little bit too. So we'll see what the next read is, Chris. Yeah, but cash is still number one, and that's again the sign of a bear market where if you can't do better than cash, you should be in cash or be heavy cash, and that's kind of what we've been playing it as. So Chris, after having the market run up to 4,100 on the S&P, then we just had 2 bad weeks where the market really totally took a dump, 2% and 3% each week. And now we're seeing a little bit of a rally this week, but now down today again. So why are we down today? We saw a CPI number.
Well, I mean, I think really it's a weird market, I think. And I think one of the odd things that's counterintuitive is, in some ways, good news is bad news. And what I mean by that is, good news, a lot of people read into is, if there's good news, that means the economy is still strong, which still gives the Federal Reserve room to continue to raise rates. So it's this really counterintuitive kind of aspect going on in the markets, and there's a lot of underlying reads, I guess you would say, that are driving that.
Yeah. Well, so it's an interesting market. So good news is bad news here, at least for the stock market. So JP Morgan put the S&P earnings at $205 for the S&P earnings. So that means that 3,800, we're at about 18 or 19 times earnings, which is pretty high. The average is 17 and the low in history is 7. But the market ran up to like a mid-20s multiple in the 1990 era. So we're kind of still on the higher end. And could the market continue to go lower? I mean, let's look at that, Chris. I mean, we've got, if the S&P earnings are like 200 or even 225. So if we were to go down to a lower than market multiple, maybe 13 times earnings, what's that? Maybe 2,800, 3,000. So we could see some big weakness from here. The low was 3,500 earlier in the fall. So then that would break to a new low. And maybe if that happened, then that would be the low. We're not predicting it. We're not, speculating and hoping for sure. We'd rather it not happen. But those are kind of things that happen in bear markets. And usually at the end, it's kind of a feeding frenzy. We have an earnings recession coming up. And so usually the markets go down when there's an earnings recession, but and it's anybody's guess how it'll play out, because we're in weird post-COVID times, and we're not really sure. We're hoping that the market's already bottomed, but we're unsure, and we're going to wait and watch and be defensive, right?
Yeah. I mean, one thing I would say is we still really haven't seen the impact of, what we would say right now is the recession. Because a lot of the numbers we get are lagging numbers, sometimes a month, sometimes even a quarter in some cases. So we really haven't seen that, and especially in the earnings. Even as late as October, the consumers were still spending, in some cases driving up debt, which we talked about, credit card debt, things like that. So we would anticipate, we don't know for sure, that eventually that's going to roll over. People are just going to pull back on their spending, and that would cause kind of what you're talking about, Brian, the earnings potential earnings recession there.
Yeah, and we seem to go through these periods of happiness when the market thinks that the Fed is going to pivot, and then the Fed comes out and raises rates again, and then they say, oh yeah, well, we said we were going to raise rates, and we are, and everybody's like, well, why was anyone thinking anything different? Because they keep saying the same thing, and then they do exactly what they say, and then the market is surprised. And then we go back and forth from hoping and then being surprised. So that's kind of what happened again here. So anyway, it's certainly an interesting market. Chris, let's talk a little bit about the economy. You've got some numbers on that, and then we're going to talk a little bit about interest rates after that.
Yep. Yeah. So, I mean, the headline I would say was the November CPI, Consumer Price Index, which is kind of the cost of goods number that came in. It came in at 7.1%, which was down from the 7.7% October read. This was, I think, probably the closest thing you could say is good news is bad news. It does show that inflation is starting to come down, albeit slightly, and it's still very hot. I mean, I think as great as it is seeing, inflation come down from 7.7 to 7.1, 7.1% is still a very high inflation number, and not certainly where we want to be in the long term. The producer price index that came out, it rose 7.4% in November year over year. And that was down from 8.1% in October. The producer price index is important because usually that also leads kind of the consumer price index, because if the producers' costs are going up, they tend to pass that on to the consumer there. So it's kind of a good forecast as far as what's going to be going on with inflation. The U.S. existing home sales came in. They slid in November for the 10th straight month. Sales of previously owned homes declined 7.7% in November, month over month. So that's from October. And November rates year over year fell 35.4% year over year, previously owned home sales. So we're continue to see really the transactions, we would say, in the real estate market really kind of fall off a cliff. Albeit home prices haven't fallen off the cliff quite. They are falling for sure, but not maybe what a lot of people were expecting. I think a lot of people had this expectation of an 08, 09 cliff. Prices were just going to plummet. There were going to be foreclosures, things like that. We haven't seen that quite yet. It doesn't mean it might not be coming down the pipeline. We don't know. But, the home prices are still falling, but not very fast, as you would say. They're not completely collapsing. November U.S. retail sales fell 0.6% month over month in November. So we're starting to see the U.S. consumer maybe pull back on some of that spending. Like we talked about before, a lot of our October, September reads were still positive. So, if that November read becomes a trend, that would show that we are starting to see the consumer pull back. And that would maybe lead to what you were talking about, Brian, maybe a little bit more pain to come as earnings kind of start to decline for these companies until we, usually it's almost like we have kind of a short-term pain in that end, and then everything gets kind of recalculated and forecasted out. And usually at that point, kind of things steady out. So that'll be interesting. And then manufacturing output declined 0.6%. As well, and that was the first drop since June. So both fronts there, we are starting to see from the November numbers some slight slowdown, albeit it is very slight. So it'll be interesting to see kind of how we end the year in December, and then what the first quarter looks like, I think, in 2023.
Interesting. So now gasoline is coming down. So the inflation numbers there are coming down. That's a big component of it, right, Chris?
Yep. Yeah. So the U.S. the average actually for unleaded gas. I mean, sure, several of you, if you filled up your tank recently, have noticed that it's declined. The average price of unleaded gasoline came in at $3.29 this past week, and that is actually below the 2021 average of $3.36. So at least in the short term, we're seeing a reprieve at the gas pump, which is certainly very helpful. But I would say on the flip side of that, from the food prices continue to be very high. And one area I thought to highlight, which is kind of interesting, is egg prices. So egg prices this year surged to record high as the bird flu has decimated some of the poultry flocks around the world. Egg prices are actually up $3 or 30% in 2022. I think they're $5.62 now, the average, which is 30% up from the beginning of this year, about a year ago today.
Yes. So, but that's kind of a unique situation because of the bird flu and all that. So that isn't caused by, so it's a unique market thing. Interesting. Well, Chris, we have a guest here to join us today, and I want to introduce everybody to Jack Walsh, or reintroduce everybody. Jack Walsh, or we'll call him Trader Jack. Trader Jack, welcome to the podcast.
Brian, Chris, thanks for having me on today.
Absolutely. And Jack, Jack comes to Four Star. He's with Four Star now, and you're the chief operating officer of the largest practice within the firm. But you've got many years of experience in the interest rate quadrant on the trading floor. And there's some really weird things going on, Jack, in interest rates. Isn't the Fed raising rates, but other rates are going down?
You're right, Brian. Yeah, I mean, the Fed, this is the most aggressive that we've seen the Fed since the 1980s. And, they did 4 75 basis point moves in succession. The Fed funds rate right now, the target range is between 4.25 and 4.5, right? And the market likes to predict, the futures market likes to predict what people would term the terminal Fed funds rate. Where does the Fed need to go to get the tightening cycle finished, right? We're all waiting for that tightening cycle to finish. And right now, the futures market is predicting with a 70% probability that the Fed will finish between 450 and 475. So we are at 4.25 to 450, and in the futures market, 70% probability of 450 to 475. And what's interesting about that is a month ago, that was only a 31% probability, right? Everybody was talking about at least 475 to 5%. And some were even talking about 5 to 5.25. Okay. So the weakness in the numbers has changed the futures market about where the Fed is going to have to go, right? So you were talking about the backdrop about earnings. I'm seeing from the markets that I used to work in, at least we're getting closer to the Fed being done for now, right? The other thing that people like to talk about is that the Fed right now is focusing on employment and inflation. And they're like, those are backward looking numbers, right? Those are not forward looking numbers, right? So once again, the markets that I used to work in are suggesting that unemployment is going to rise and inflation is going to fall. And I guess the question is, how fast? So, and then as you go further out, so we talked about where the Fed needs to get to, right? And we've been talking about it here in the office, that as you go further out in the futures markets, the third quarter and fourth quarter of 2023, not that far away, they're starting to price in Fed easing. Not aggressively, but if you look at those futures prices, you could see the Fed easing in the third and fourth quarter of 2023. And what's interesting about that, Bri, is what you're saying and what you said earlier is the Fed keeps on telling people we're going to get to a level and we're going to sit there. And the futures market continues to push back against them. And I would say the one thing that the Fed needs to do is they need to be credible with their fight against inflation. So they're after saying that inflation was transitory and seeing it spike up to 7 or 8%, the Fed is really trying to get credibility back.
Yes. So they're pushing hard on this interest rate thing and ignoring a lot of evidence, but the market's still saying that they're going to be lowering rates by when? Maybe, Jack, the fall? What is the market saying?
Yeah, the futures are saying exactly September, December, third and fourth quarter of 2023. When you look at those futures prices, we'll talk in basis points here, which is 1/100th of a percentage point. When you look at those futures prices, there's about 19 basis points of easing priced into this September 2023 futures contract, and more so as you go further out.
Right.
And you could see that in other sectors of the interest rate market, Bry, if the Fed is going to push rates to 475, right, which is what the most likely probability is, you have 2-year notes trading at 418, right? Normal times, we have a steeper, right? If the Fed funds rate was going to go to 475, the 2-year note should be at 5%. In the market right now, exactly. In the market right now, the 2-year note is around 420.
So we have an inverted yield curve. Is that what they call it?
Exactly.
It's
Exactly.
like instead of a sloping upward, it's like a little mountain and it's going lower. So an inverted yield curve always points to recession. And we clearly know now with all the layoffs going that there's going to be some form of recession. Now, people talk all about how bad it's going to be or what, but Jack, you also have done a little bit of work on inflation, and inflation could lead to recession if it doesn't go away. Isn't energy a really big part of that?
Yeah, Brian, that's why what Chris said earlier about gas prices, right? It is known that 70% of food prices are tied to energy, whether it be higher costs for the farmer in putting in his crops or just getting that product to market.
Right.
So what Chris was saying earlier, that's a very good indicator of what hopefully we could see with falling food prices.
Yes. So it's interesting. Thanks, Jack, for giving us some enlightenment on that. It's rates are going up. The Fed's trying to keep inflation in check and bring it down. They're not having as much success on energy prices, but they're working on everything else. And we'll see if they're successful at that. But the market's already saying they will be successful to the point that they'll need to be lowering rates to then get the economy going, because they're going to hurt the economy in the short run, which everyone kind of knew that. But that's kind of the way it's looking right now from your perspective, Jack, right?
Yeah, and also, Bry, keep in mind that there are some changes as far as the voters are going to be next year, right? And there's going to be 3 so-called hawks, meaning that those people that want to continue to raise rates and squash inflation will be replaced by 3 doves, meaning people that are more apt to stop short on raising rates and ready to boost the economy. So that's a very interesting twist on this whole inflation argument.
So when you say voters, we mean voting members of the federal open market policy committee, right?
Exactly.
Yes.
Exactly.
So it's interesting. So the components of that will change as well. So that's what it looks like right now. Looks like we're going to have a recession. Looks like it'll hit stride soon, and then we'll be looking for relief, and the market signaling rates are going to be lower in the fall after going higher here in the short run. So, all right. Well, thank you, Jack. Thanks for your insight there. We'll see if it plays out that way, but at least the market's saying that, right? So
right.
See if the market's right. Mr. Market, are you right or not?
Right. Thanks for having me on, Brian, Chris.
Thanks, Jack. Thanks for being with us.
Thanks, Jack.
So Chris, looks like we have a recession coming. Holiday season retail has been pretty weak. We're seeing layoffs left and right. We got jobs. DoorDash is letting go 1,200 people. Tech companies, the worst start in tech in a month in November ever, with 31,000 tech jobs being released. So clearly there's a lot of things going on that are leading to this. Do you have anything else on that subject, Chris?
No, I mean, I think, like you said, it seems like we're definitely headed into a recession. I think one thing I would caution people is, when people think recession, I think that it's instinct to think back to 08, 09. And this is this recession could be, and we don't know, but could be very different than that style of a recession. obviously had a huge impact on the financial institutions. You had to have takeovers, things like that. So this will most likely look different from that front. So potentially the severity, things like that. So I would caution. I think people just get almost kind of PTSD almost from 08, 09 and think of the worst. You know, I think this recession is most likely coming, and you know, that's normal for the market. I mean, we haven't had one for a while. It's a normal acting part of the market cycle.
Yes. Well, it's interesting. So we'll see what happens. I know looking at the international markets, the Chinese have obviously announced that they're going to continue to build coal plants. Now, we have a very strong environmental group in America, global warming at folks that believe in that seriously. And but you know, China's not playing ball at all. They're claiming that they're going to eventually be global warming adherents, but they're building power plants. 60% of their energy is coming from coal, and China's emitting more than 2/3 of the emissions of fossil fuels, 2/3 more than the US and Europe combined. So looking at that, if we have policy changes, that leads to changes in pricing. And a lot of what's going on with our economy is relating to energy and our restricting of fossil fuels, looking to electric, and yet we don't have enough of the other sources at a plentiful rate in a plentiful environment to achieve that yet. And that's part of what's happening. That's part of why the inflation has been so bad. Chris, what we see out there in China, there's a lot of interesting things happening now too that we didn't know and expected.
Yeah, so the biggest thing this week in China is they're having another wave of COVID kind of sweep the country, and it came out this week. A major Shanghai hospital, a note from kind of the manager of the hospital, that staff told them to expect at least half of Shanghai's city population to be infected with COVID in the next week. For reference point, there's about 25 million people that live in Shanghai. So, at least in this next month or in the short term, China's going to be dealing with significant COVID issues. And in the past, their crackdowns, how they've dealt with it has been severe and crippling to their economies in many ways. So it'll be very interesting from a global standpoint, depending on how they react to that. There could be implications stretching all the way to the U.S., especially on the supply chain side. On another note, Tesla, people who are bearish on Tesla, I should say, are big winners this year. They have about $15 billion in gains this year, as Tesla shares have plummeted 61% in 2022 or this year. So a lot, bears on Tesla usually are betting that the stock is going to go down. For the last 3 or 4 years, they have lost a lot of money. And this was one of those years that they actually recouped some of those losses. And it was a good year to bet against Tesla.
Yes.
YouTube came out as most likely, I think it actually hit the tape this morning, but the winner for the rights to the NFL Sunday Ticket, which they're looking to purchase and upwards of $2 billion annually for the rights to the Sunday Ticket.
Okay.
Currently, DirecTV pays about $1.5 billion annually. And they've had those rights since 1994. So the Sunday Ticket, for reference, is kind of the rights to NFL or the football games that are out of market. So if you purchase a Sunday Ticket, you can watch games, for your home team if you do not live near, in the same city, or it's not on major television broadcasts. Mm-hmm. So that's big news. I think it's a win-win for the consumer, because I think a lot of people did not like how DirecTV ran their Sunday Ticket operation, but we will see. And then a couple other small things. Argentina, congratulations to Argentina, who won the World Cup in an amazing game, a shootout really, versus France. So congratulations to Argentina. We have a major snowstorm right now sweeping across the U.S. It's actually due to hit Chicago, where we are at, I think this afternoon, in the next couple days, with wind chills in the negative 20s. Because that's what people expect or think of when they think of Chicago anyway, is the frigid, freezing temperatures, but it's kind of sweeping across the nation. So it may not be a white Christmas for several people, but it certainly is going to be a very frigid Christmas for several people.
A lot of
And that, good.
A lot of other things that are going on in the world too. You were going to talk about fusion, right? Hydrogen fusion.
Yeah, and I think that's a really cool thing to, like you talked about, Brian, with the China and global warming. One thing that's always bothered me with the global warming message is in the name itself, it's global. So I mean, we can do as much as we want in the U.S., but you have especially China and India, they do whatever they want. Really, we're not really doing anything, I guess, in my mind. But we had a major breakthrough in fusion reaction earlier this December, and what happened is actually, so they fired these lasers into a kind of a fusion, and it was I think it was 2 megajoules roughly of laser light into a fusion capsule, and it produced 3.15 megajoules of energy. So that's positive because that is about 3 sticks of dynamite of energy produced. And anytime you can put in a certain amount of energy and get a positive energy out, obviously is very exciting. So it's a huge breakthrough, very, very early breakthrough, but that's a great sign of possibilities to come, and a new great potential clean energy source that could be coming down the line in the future.
So if they produce more energy than they spend, then it's positive. And if it's cheap and clean and could be plentiful, that could be a big answer to a lot of our energy issues, whether it be replacing fossil fuels or replacing, the costly electric energy that costs other sources to produce. But if this self-produces, that's amazing. That could be a big game changer for the world.
Oh yeah. I mean, I think, and it's funny because I think people get caught up. Like, I think that no one's against clean fuel, clean energy, and anything like that. There just isn't really right now a reasonable replacement for fossil fuels. So, and I think this has a great possibility to be a good, reasonable, clean, like you were mentioning, very plentiful replacement to fossil fuels, which I think could be a great solution moving forward.
Absolutely. Well, a couple of other little tidbits we want to mention too, besides the great hydrogen story. They're now that TSA is coming through with biometric facial recognition. Those of you who have been in the airports and seen the Clear system, where they get you with retinal eye recognition. So this is just general facial recognition. So it's some people are a little scared by that. But certainly with retinal recognition, that's kind of the next step to just facial recognition. But you hear stories and fears about Get Smart and the FBI and all the things that people worry about. But it's certainly technology is coming on to the point that they're going to be able to do that. So it's exciting if managed properly, I guess, if you will. So I wanted to mention that. I also a big news about the male fertility crisis in America. Sperm counts have fallen in half in the last 40 years, tied to obesity and fitness declines. So we're causing our own problems by not being ready for good health, and we're causing our own fertility crisis in America with our obesity crisis. So anyway, also on the healthcare front. A recent study confirms the linking between the mRNA treatments that they had called vaccines, the pandemic, but they're really not. They're actually treatments, and the vaccine is where you actually use part of the actual disease to create immunities in your system, but that's not what the mRNA treatments were. But there's a clear link now between that and cardiac damage. So all the people that took the vaccines, as they called them, mRNA treatments, are now at risk for, they're saying, as many as 10% of the country will have some sort of cardiac issue. So there was a pilot at O'Hare that died in liftoff in the cockpit. The co-pilot had to steer the plane back to the airfield, hearing stories of globulous things growing in people's hearts and stuff. So let's hope that this is managed some way and they find a solution to this. But so some of those vaccines, as they called them, may not have been as useful as folks hoped. Anyway, we'll leave it there. We just wanted to bring that out. Everybody should be aware of that information that's out there. As everybody knows, that 4-Star does a lot of blogging, and there's blog posts on that hydrogen power issue on our website. So if you go into the 4starwealth.com, then there's blog posts. The Leadership Matrix has a piece on hydrogen power. And because it's Christmas, we have one on the Queen of Christmas, Mariah Carey, and all the things that she's done. We're in that season. So everybody have a look at that. And then there's 2 podcast interviews since our last discussion with you and me, Chris. We had Alanka Nobles when Alanka was on to talk about energy and oil investing programs. And she's a great representative of that business. And she's right down there in Texas where a lot of oil happens. So it's a really good interview, and everybody should have a listen to that. And also Michael Friedman, who is one of the leading proponents of life settlement investing at a company called Lighthouse Life with their Beacon bonds. So that interview is out there as well in the podcast world, and certain videos are hitting the screens also. So everybody have a look at that. We are now down to a couple of days before Christmas. So for all those who celebrate Christmas, Merry Christmas from all of us here at 4-Star. It's been a very, very difficult year for the financial markets, but a decent year, Chris, for our clients, because we didn't lose them as much money with the rotation models and dynamic models and things like that. And we've tried to preserve everybody's wealth. So hopefully the markets will bottom sometime in the coming year. If they haven't already bottomed, then we can go back to hopefully normal, orderly markets in a normal, orderly country, which we have not had for the last year, for sure. But we're hoping for the best in 2023. So Chris, why don't we leave it there?
Sounds good.
Well, for the whole 4-Star team, for Laura, Chris, Christine, Fred, Jack, and Kamal in Chicago, our East Coast team, Tucker, Karen, and Brian, thanks everybody for being with us on the 4-Star podcast. And we will be back again with another episode here shortly, give you an update on the economy and some other great interviews to give you some great ideas on how to operate in this financial world and this great country of ours, America. Thanks everybody for being with us. Happy Christmas.